From the market today with Stan Shamu from RG in Melbourne. Stan, we just talked through the movement in the gold price on Friday. It wasn't good. Copper and oil also sharply lower. Can we get your take on how this is all likely to impact the Australian market at the open?
Well, at the moment, it's not looking too good at all. We're looking at a 0.5% drop at the open to 4,990. Of course, last week we managed to hold above that 5,000 level, with the market putting on about 2.5% in what was a pretty good week, particularly led by the resource names. Unfortunately, today they're likely to tend the villains. We were expecting a BHP to be lower, about 1.5%, just looking at the ADRs there. And at the same time, I think the confidence would have been sapped out of investors who were starting to grow a little bit more positive on the resource names last week, with steep declines for the likes of gold, which is down 5%. Then we can only look at gold names as the underperformers of the day. Would have to look at the likes of Newcrest, Oceana Gold, Medusa Mining, which might also suffer a double whammy as it's come out with a bit of a production and output downgrade today for FY13 to the 70,000 to 80,000 level. Now, this isn't their first downgrade. They've also downgraded last year in April, and this is now a downgrade from what they had given as guidance in January. So investors are likely not to take this too lightly, and the stock's likely to be punished. But all things considered, it's probably a good day to actually post this downgrade, considering gold names were likely to be sold off anyway. Of course, there's always the likelihood that we'll see some bargain hunters who think maybe the sell-off in gold was a bit overdone, starting to creep in and try and buy up some of these names at lower levels. But it's a very risky move. Of course, with gold in sort of the bear market territory now at its lowest level since July 2011, then it's really a risky play to try and get involved in the metal at these levels. I think the positives for gold at the moment are the fact that the US dollar has lost its shine, with the US economic data not really revealing enough strength to warrant the Kiwi being pulled by the Fed. So maybe in the short term that might lead to a recovery, but chances are in this situation we'll see traders look to sell gold into strength, and this is likely to extend to gold names as well. I think recently a lot of analysts out there were warning about a value trap in gold, and this is exactly what's playing out at the moment. It wasn't all bad though in the commodities space. We actually have seen iron ore manage to maintain a steady rise. It's still above that $140 a ton level, and this might be a slight positive for some of these iron ore names who've got production reports this week. But for now, I think today is likely to be a fairly poor day for the resource names. They're likely to drag us lower. We'll probably close below that 5,000 mark. And we'll probably see investors look for safety in some of these defensive names. But whether or not these can actually edge into positive territory because of this remains to be seen. We'll have to wait for some of the local and regional data. We've got home loans out at 11:30 this morning, expected to be up 1.5%. So they were negative in the previous month. So this will probably be a slight positive. But with another data dump from China, then it really does throw a curveball. So we'd like to see the market just sideways until we get a better read of what's going on in China. Of course, the headline will be their GDP number, which is expected to be up 8%. So that will be the key event for Asia today.
Okay, Stan Shamu, thanks so much. Appreciate it.
Cheers, Kate.
Stan joining us from RG in Melbourne there. Well, the milk wars are stepping up